Hello and welcome to this episode of Mutual Fund Masters. Joining me today is an industry veteran, Sundeep Sikka, who is the Executive Director and CEO at Nippon Life India Mutual Fund. Thank you very much, Sundeep. It's always been a pleasure talking to you, and it's good to have you here on Money 9. My first question to you is, as I mentioned, you're an industry veteran. You've been pretty much around from the time this industry really took shape. What is the kind of evolution that you are seeing in this industry? Let's talk about two or three things. For example, we are seeing a trend towards international funds. We are seeing a trend towards index funds, ETFs, something we talked about 20 years ago. That whether or not this industry should evolve in terms of index passive investing as well, which was very big globally. What are some of the trends that you're seeing recently? Last year we saw a large number of investors choosing to go directly into equities by opening their broking accounts rather than coming through the mutual fund route. So, as someone who's seen so many aspects of this industry, how are you seeing the evolution going forward?
Vivek, thanks for inviting me. And I think, and for the kind introduction, when you use the word veteran, I should start for your audience. In this market, you're always a student. You're never a veteran. So I think you're always learning on a daily basis. Same is the case with us. But I think it's been a very interesting week. If you were to look back, 20 years, how mutual fund industry has evolved. And more than the industry, I think it's the investors who have evolved. Mutual funds as a term was an alien term. I think I remember talking about mutual funds to investors in small cities and towns, and people used to ask, what is it? Today, the fact remains that mutual fund does not need any more introduction. Number two, I think the biggest thing I have seen, and which is very, very exciting, is the investors have matured a lot. They've understood mutual funds are not a magic pill that you take it and you can, create wealth overnight. I think investors are maturing. Let me go back, last year was one of the best case studies for mutual fund industry, and I think you talked about a couple of trends also. But let me give you an example. Last year we saw Nifty, 24th of March, because of COVID, we saw Nifty coming down almost from 15,000 to 7,500, and then bounce back. I think when I look back, in the history of the mutual fund industry, and I will talk specific data for ourselves. We used to see whenever index used to fall 1 or 2%, there used to be calls in a call center coming. It used to be low. 8 o'clock in the evening, the NAV comes. People used to start calling. What is the NAV? What happens now? And right now, when I realized this year, there was nothing like that. Then also what we used to see was the investors used to panic a lot every time there was a major correction. And right now, people are understanding. Investors are understanding. And I think I give not only credit to the investors, but also media seniors like you, who've been educating investors a lot, because it's important how long you stay in the market. It's a very interesting thing. I think you talked about evolution and two things that you touched which are very, very critical. One is how the retail investors have been behaving. And especially during the last year, it was a work from home. You saw a lot of demat accounts open. It is the all-time high demat accounts getting open, which is very good for the capital markets in India as new investors come. I think you see new investors, it's going to increase the depth of the capital markets, because no investor comes only for stocks. The same investor will come into mutual funds. If you were to go back to the history, every time there was a big IPO in India, immediately after that, next 2-3 years, we saw a lot of investors come into the mutual fund. But the another interesting data which worries me also is, as per the recent data which came out, almost 40 to 45% of the traded volumes on the stock exchanges is done by retail investors. But actual ownership of retail investors in the listed companies in India is only 18%. So my only worry is these investors who have come to the capital market, they don't become traders. They remain investors from long-term point of view. And which is the reason why mutual fund offers a beautiful and amazing platform. The other thing that you touched was, I think this year also was very interesting for ETF business and passive business. Over the years, I think we've always believed and said that I think mutual funds will always create alpha, and I believe it will. But we also saw, during the last few years, there were times, as alpha generation becomes more and more difficult, we saw a trend, a lot of mutual fund investors, and specifically the savvy investors. So if I was to look at the base of the pyramid, the investor who's investing 500 rupees, he's still coming through SIPs and in mutual funds. But you see the higher end started moving towards ETF. For us as an industry, as well as for as a company, we've seen highest number of ETF investors getting added last year. So it's a very interesting trend. It's not, we acquired as a company, we acquired Goldman Sachs and Benchmark Business way back in 2016. And I remember a lot of industry friends used to say, in Sundeep in India, ETFs can never be big. I think
Hmm.
our belief has been we are here as a manufacturer to offer what is right for the investor. I cannot choose what is right for him.
Hmm.
It is what is good for him I have to offer. And today I'm happy to share with you the kind of acceptance of ETF which has come up is so high, and I clearly see a trend emerging. Both the active will be there and the ETFs will be there. Also, Vivek, I'll take a minute extra to also explain the emergence of a new thing which has come up, something between ETFs and active funds, which is basically the passive funds. Because ETF requires you to have a demat account, it has to be listed on the stock exchange, and you need a broker account. But what we have seen is also the wrappers around the ETFs, which is offering low cost passive funds. So I think it's a very interesting times. I think we see clearly in India at this point of time, only 2.3 crore investors are investing, unique investors are investing in mutual funds. Yesterday's data, which has come from BSC, total number of capital market investors in India is only 6.9 crores. And I mean, if you were to look at it, today we are coming into a stage, I think earlier you used to have high interest rates. People used to, in high interest rate regime, people invest in hard assets, real estate, gold. I think the trend is changing. So I think I personally believe, I think the industry has evolved a lot. My apologies for giving a long answer to a short question, but I think it's been a very, very interesting journey. And I see clearly the evaluation of the mutual fund industry and the investors who will leave the traditional assets and come towards more mutual funds and capital markets.
Sandeep, we live in very difficult times, though things are getting better now, but still there is a lot of suffering out there. There is a lot of worry, a lot of loss of income. People have had to pay significant amounts for their treatment. Liquidity, household liquidity has taken a hit. What can an investor do in such times? What should you be doing? There is a lot of fear out there on the street. What should you be really doing at this time?
So, Vivek, it's a very valid question. And I think time cannot be more apt for this question, because then what's very important is any kind of emergency or problem comes without informing you. I think, but you have to be ready for it. I think there are two paths. A lot of people, some people were ready for this, and many were not. And I think why I say this, I think it's very critical to keep planning for long-term emergency events in advance, and that is where it is very critical to have a regular, small amounts of money invested through SIPs, and I think that needs to be kept for emergency reserves. I think during this period, it's been really tough. I think we've seen so many people, losing lives, losing jobs, and various things. And I think the way I see is, even if somebody had not started investing for any emergency in past, I think this is the right time. And also, I think we have as a country been we have very young population. I think my advice to a lot of young investors will be with who've been in a lot in exuberance. And I remember once coming to your show a long back, and I mentioned it's interesting whenever an Apple launches a new iPhone, the queue outside that is much longer than it deserves. People do not understand that you are spending money. I mean, it could be that exuberance. You like a new phone of 1 lakh rupees, but that fund is phone is only going to depreciate. So what is critical is you have to invest for future. So I think it's my advice at this point of time will be it's important to save. As a country, we do not have the social security system which a lot of Western world has. Trying to copy that, try to go. I want to spend money on exuberance, holidays. All these things should be cut down during this period. I think it's important to create a emergency reserve. And emergency reserve does not mean that you have to invest lakhs and lakhs today. 10,000 rupees invested a month can, I mean, if you were to look at again any SIP, and I'm not trying to look at one scheme versus other, any small cap scheme, if you were investing for last 5 years, also 10,000 rupees a month, you would have invested 6 lakh rupees, and that 6 becomes more than 12 lakh rupees. So I think it's very important to keep investing little amounts. And I think the most important, 2 years back, none of us, you or me, knew the word called COVID. And I can also assure you, even if 1 year, 2 year, 5 years later, some new problem will come for individual, humanity, or others. But you have to plan for that today. So I think my message will be, take those baby steps today. Spending to create big reserves. It's not about investing big money. It is small money invested regularly, which can create that reserve for these emergency times.
Hmm. Sandeep, you've been a great believer in equities. So, for somebody who's looking at starting out right now, uh, how important, first of all, is equity in a portfolio, and how do I go about building my first equity portfolio, so to speak?
So, Vivek, I think it's a very valid question, especially for the education of new investors. I think somebody who's starting to make a portfolio, the biggest mistake you can do is to create a portfolio without having equities in it. And why I say this, I think is very critical. I think we have to understand from a long-term point of view. A lot of Indians in past, and especially our earlier generation, confuse savings and investments. And when you were keeping money in the bank or in fixed deposit, you were getting a double-digit return. You and me will remember 15, 20 years back, banks used to give, we used to have FDs given 15% return, 13% return. I think that money would have multiplied every 5 years. But the scenario has changed. All the banks are giving you a return of 5 to 6%. And if you were to look at inflation, it is giving you a negative return. So there is no asset class which can build up long-term assets for you without equity. Having said that, it is also very important to, a lot of people do not understand equities. So it's very critical, going to your earlier question on a lot of people directly coming to stock market. I get worried. I get worried because the highest number of new demat accounts opened during this year. A lot of these people, first time investors coming into stock market, we just saw a bull run. I mean, wherever you invested in the last 12 years, 12 months, I think gave you return. But life is not like that. I think markets is a lot more complex. So I think equities is must, and everybody should take their first baby steps into equities through mutual funds. The other important thing is going to be, it's very important when you're building up your portfolio, how do you keep your emotions in control? And again, last year, like I said, it's been one of the best year to look at every aspect of investing, human psychology. You saw during this period, Nifty, in the month of March, Nifty coming down from 15,000 to 7,500. I think it's a question of holding your nerves. A lot of people I know who got worried and made their equity exposure zero, and they lost everything. And there are a lot of people who started investing on that day thinking it will always double every 1 year. I mean, that is also wrong. It has to be a very balanced approach, but you cannot build a long-term equity without a long-term portfolio without having equity. For me personally, when my both daughters were born, the day they were born, I started a SIP in their names. I mean, and till date, that money, it may not be the best scheme because every 2 years, 3 years schemes keep changing. But the power of compounding and equity has helped to create a reasonable portfolio for the graduation and post-graduation.
Hmm. That's wonderful to hear, Sandeep. One final question. The power of longevity when it comes to equity. You mentioned power of compounding, but again, if you look at recent data, it says that less than 10% of SIP accounts are held for even 5 years. Recently, I was reading that some new data suggests that this is also changing. It's becoming better, but it still seems quite abysmal. I mean, you've run schemes going back 20, 25 years. And how many of the investors who initially invested probably stayed to see those magnificent numbers that came out 25 years later? So, what is the importance of long-term investing to staying invested? If you could talk a little about that.
Vivek, I think if you were to ask me, one thing that hurts me is, I think the Indian capital markets, Indian mutual fund industry has created more returns than what investors have taken home. And
Hmm.
I'll give you this example. One of our own oldest scheme, Nippon Growth Fund, I think has grown 150 times and has about a million investors. So again, so what does that mean? Somebody who invested in 96, 1 lakh rupees has become 1.5 crore rupees. Now, but the reality is the scheme has got a million investors, but the people who have been through this entire journey and taken advantage of this are less than 10,000. So I think it's very critical. Like anything else, discipline is very important. So I think it's very important to stay through this journey for a long term. I think this data, I also feel personally that the number of investors who are staying for a long term is a lot lesser. But again, that's also a function of a lot of these SIPs were started some time back, and earlier a lot of SIPs used to be, for 1 year, 2 year period. But seeing the positive thing now is a lot more than 50% of the SIPs, incremental SIPs that we are seeing now getting registered, they are coming for more than 20 years. So people are evolving, people are learning. And I think I'll again use this word, important to, what is SIP? SIP is just a disciplined way of investing. Everybody knows what is right, but the discipline is more critical. I mean, I always, health and wealth both are very critical. And I always say, everybody knows it's important to do physical exercise. But the reality is, the data suggests the people who decide that you have to do in a disciplined manner, whatever time in the day, morning, evening, they end up doing it. People who plan, let me do it whenever I'm free, they never do it. So investing is exactly like that. SIPs, you cannot be continue or discontinue seeing the market conditions. Yeah, I think you once invested, it has to be for a long term. And like I said, it is an irony today, a scheme where 1 lakh became 1,50,000, 1 crore, 1.5 crores. A million investors, but only 10,000 people went through it. And this requires a lot of education, lot more education. And I'm seeing that positive change. Still a long way to go, but I'm sure, I think in times to come, on every incremental year when we see the data, things will keep getting better.
Always a pleasure talking to you. Thank you very much, Sundeep Sikka, for joining us here on Money 9. Truly appreciate you taking time out in these very difficult times. We wish you and your organization the very best.